Plug Power earnings live with 10 facts. This will change everything. So what if I told you there is a business, a stock on the NASDAQ that has been to 70, crashed back to pennies, got charged by the SEC, survived, and is still one of the most traded, most debated, most emotionally charged stocks in the entire hydrogen sector? It's crazy, right? And what if I also told you that right now earnings are coming? They're just a few seconds away. We're going to cover it live. And depending on what happens in the next few days, this stock could either begin the comeback story of the decade or confirm what the bears have been saying all along. This is a big moment, folks, and today we're going deep on Plug Power. Before these numbers drop, and I want to give you 10 powerful facts about this company that every investor, bull, bear, or sitting on the fence, absolutely needs to know. And I'm saving the most important one for last. Fact number 10 is going to reframe everything. You think you know about this stock? You think you know what it's all about? Do not leave before fact number 10 and why this matters right now so much. Here's the thing about Plug Power earnings. These aren't just the numbers. Every quarter when Plug Power reports, it doesn't just move the stock, it moves the entire hydrogen sector. ETFs, competitor sentiment, all of it shifts. So whether you own Plug or you're watching it, or you've never bought a share in your life, what happens with this company tells us something bigger about the future of clean energy in America. So let's get you ready. 10 facts starting right now. The earnings will follow all of this. Tap the like button. Have you all done that? Have you considered subscribing? Join us for this explosive event on Plug Power. Now, if you're watching later on and you're not watching it live, you can skip through right now. But those of you that are watching live, put the kettle on, click the share button, get everybody in, because it's now the Plug Power earnings, and you won't want to miss this one. This is a big one. Plug drives everything. This is fascinating. You wait till you hear the guy speak as well. A lot of people say, and he has a few times been perhaps drinking too much scotch on the show, literally. Okay, guys, it's Plug Power right after this. It's showtime. Here we go. Plug power earnings. It's a big one tonight. This one can be so volatile. As you can see, it's already up nearly 15%. This is the sort of asset, the sort of business that can explode. Remember, this used to be $70. This could go absolutely berserk, right? Be very careful with this one. A lot of external manipulation. I'm going to break down all the news for you, all the facts that you've probably never heard before, and then bring you the earnings call. The earnings call is in 45 minutes, so buckle up, get ready for it. Plug Power. If you please tap the like button, hit subscribe. Even the people from Plug Power are asking you here to tap the like button and subscribe. Yes, they are. They love the channel. You ready? You're going to enjoy this one. Plug Power. Get ready for the event. And when you hear the CEO, you will think actually he's had a few drinks. And sometimes he actually has. But anyway, that's another story. You can decide what you think about that as we get to, whoopsie daisy, I'm stopping and starting my own stream here. Oh my God, I've done it again. 3 times in a row. Anyway, let's get straight to it. What a bloody awful start. I'm all over the place. My trackpad feels weird. So I'm not skating across it like I like to. Things aren't right there today. Things aren't right. Okay, let's get straight into it. Fact number 1. You ready? Here we go. It's the plug earnings, as you can see, now 14.5%. Markets are going up now. At least my market is. I'm heavily in the S&P. Sorry, heavily into Coca-Cola, and it's starting to do its job. The rotation is beginning. Okay, so that's very, very nice to see that finally happening. But anyway, good stuff. Let's go. So founded in 1997. In fact, I'm going to start that again. Here's fact number one. Fact number one for the plug earnings. Founded in 1997, before most investors knew hydrogen existed. Here's something that might surprise you. Plug Power is not a startup. They didn't come out of some Silicon Valley garage in 2019. This company was founded in 1997. Think about that. While most people were still figuring out the internet, Plug Power was already betting on hydrogen. Been around for a long, long time, but not in its current form. They were betting on hydrogen fuel cells. Their original mission: replace the lead acid batteries in forklifts. Not sexy, not viral, but it was real. It was commercial, and it actually worked. Amazon's warehouses, Walmart's distribution centers, these massive operations were running on Plug Power hydrogen. Did you know that? Most people don't. Quietly for years, long before Plug became a meme stock, and it really did, with external Russian manipulation. They tried to buy me, literally can't buy me. People have tried every day, 30, 40, 50 grand a pop. I'm not interested. This channel will never be sponsored by anything like that. This is a company with nearly 30 years of history. 30 years of history. That context matters. It does. As we now go into fact number two. Amazon and Walmart weren't just customers, they were believers. When people ask why Plug Power was taken seriously, this was the answer. Amazon and Walmart, two of the most operational, rigorous companies in the world, became major Plug Power customers for their warehouses and logistics operations. This wasn't marketing. This was real infrastructure running on Plug hydrogen every single day. Now, here's where it gets complicated, because Amazon receives stock warrants tied to their purchasing deals. So when Plug exploded in 2020 and 2021, those warrants became enormously valuable and enormously controversial. Either way, when the world's biggest retailer and biggest e-commerce company both say yes to your technology, you listen. All right? So, fact number three. We've got just under 44 minutes to go before the call begins. It's going to be very exciting tonight. We're up nearly 14%. Look at this. So fact number three, Plug Power went from $5 to $70 in 1 year. I want you to picture this. It's early 2020. Plug stock is trading under $5. By January 2021, 12 months later, it hit an all-time high above $70. That is a 1,400% gain in a single year. If you put 10,000 in at the low and somehow got out near the top, that's 150 grand. That was the clean energy mania. Amazing, right? Imagine. Did you do that? I know I didn't. Green hydrogen was the narrative. Every fund, every retail investor, every ETF was piling in. Plug Power was the poster child. But here's the other side of that coin, and we'll get to it shortly, because what went up that fast came down hard, and bloody hell did it come down hard. And there was all sorts of fighting and rioting and screaming and shouting. On the call, we know, we covered it, all right? And people were getting really, really angry. I had people messaging me, offering me all sorts of money, trying to sponsor it, and was not happy. And they were all Russian oligarchs. I showed you on the screen about that. So here we go. Fact number 4. They raised over $5 billion, and the SEC noticed during that hydrogen mania window, 2020, 2021, Plug Power went to capital markets aggressively. They pulled in over $5 billion from investors who believed the hydrogen future was arriving fast. Now, on paper, that is. That's a war chest. That's infrastructure money. But the SEC later flagged that much of this fundraising happened during a period when the company had material accounting and internal control failures that weren't properly disclosed. Oh yeah, I remember the days. There was a whole debacle, and yes, you'll hear about it tonight, which leads us directly to fact number 5. Fact number 5, the SEC charged Plug Power. This actually happened. Yep, it did. I'm not making this up. It was quite dramatic. I'm not going to sugarcoat this one because this wasn't nice at all. In August 2023, we were covering it live. We saw it. We saw what went down. The SEC formally charged Plug Power over accounting failures and inadequate internal controls tied to financial restatements covering the year 2018 through to 2020. Plug agreed to pay civil penalties. They did not admit wrongdoing, however, be clear about that, which is standard in these settlements, but the underlying facts were damaging. The company had to restate 3 years of financials, and during that window, they raised billions from investors. Now, is this a death blow? Because look at it now, $3.65, not quite what it was, right? Not necessarily. Companies survive SEC charges, and what matters is, did they fix the controls? Is the financial reporting now trustworthy? Those are the questions you should be asking as earnings approach. Just 40 minutes ago, 39 minutes ago, and we're going to be there. Gets exciting. Fact number 6. Plug Power has been one of the most shorted green stocks on the stock market. It has. People are in and out. They say they love it, then they short it. They say they love it, then they buy it. All over the place. I've had so many people try to manipulate me on this, and I will not have any of it. So it is what it is. Please tap the like button. Consider subscribing. Even Plug Power are asking you. Look, even Plug Power is saying tap the subscribe button and get involved. Thumbs up the video if you like this. I'm not sponsored by anyone. No one tells me what to say. I'm just here to help and provide you information. So here we go. It is and has been one of the most shorted stocks on the stock market. Pretty scary stuff, right? Shorters never win, by the way. They always win the battles, but always lose the war. So there's a reason. There's a reason Plug moves so violently on earnings days. So that's why I invited you to this event tonight. I told you it'd be exciting. I mean, look at it. We're already up 15%. This can go up 50%. Like in minutes and straight back down again. We've seen it. We've been part of it. If you like violent events, this is the one for you. All right. Short interest all over the place. Plug Power has been a consistent target for short sellers. It's not really a surprise, really. Hedge funds and traders who believe the stock is overvalued and bet money on it going down. In January 2021, at the height of the run, short seller reports dropped into the market and contributed to brutal reversals. The bear thesis had real merit. Cash burn, profitability, timeline, competition. But the extreme short positioning also creates the conditions for violent short squeezes when positive surprises hit. And we've had a few moments like that. Will we get one tonight? Will they announce something special? Well, we'll find out shortly, which means earnings days is never calm around this stock. This is why I invited you all for this event. Surprised so few people are actually watching it. In fact, hardly anyone, in fact, no one covers it anymore. If you go into YouTube right now, I'm going to do it again. I don't think anyone is covering this at all at the moment. It used to be all over the place. Let me have a look. Plug Power, whoops a daisy, Plug Power earnings, right? I'm going to search for it now. No, No one covering it. Look at that. No one covering it. Yeah, we are number one. Yeah, we are number one. It's only us. Look at this. If you type it into Google, YouTube, Plug Power earnings live right now. If I filter that with what's live right now, it's us. That's it. They're doing hims and hers. Look at that. That's it. No one's covering it anymore. It's one of those things that this could suddenly explode because there's no interest and all of a sudden it catches up on you. I like to cover these things when no one's paying attention. When people are sleeping, I'm always working. That's always been my way. When everybody's sleeping, I'm working. Anyway, it's always been a battleground. This stock always is violent and crazy, and now no one's even bothering looking at it anymore. Fact number seven, energy wars are real, and hydrogen is on the front line. This one requires some nuance, so stay with me and let me explain it all. You've probably seen the speculation online, claims that foreign interests or geopolitical forces are actively manipulating Plug Power. I've spoken about it on the show. I've seen Russian oligarchs come in, start paying to promote my videos. Then they invite me to join groups. And when I go and look at the group, all they want me to do is say Plug is great and pump it to my audience. It's unbelievable. It really is. And you can't buy me. Offer me $1 million. I'm just not interested. All right, just not interested. I want to do what's right for my audience. So let me be straight with you. There is no verified public evidence that any foreign actor has been specifically targeted around Plug. But here's what is true and is important. Global energy geopolitics absolutely influence the hydrogen market. Russia's energy leverage over Europe accelerated every Western government's push towards clean hydrogen independence. Okay? The Inflation Reduction Act, Europe's hydrogen strategy, these are direct geopolitical responses to energy vulnerability. The smarter framing is this: any nation or interest that benefits from fossil fuel dominance has a structural incentive to see hydrogen fail. Think about that just for a moment. All right. Plug Power is operating in the middle of one of the most geopolitically charged energy transitions in human history. And with all these wars going on, that's why this stock is always under attack. That context shapes everything. As we now come on to fact number 8, very, very interesting. We're just watching this stock just go round and round and round at the moment. Not much going on. At any moment now, we'll get some information. We've got the earnings call half an hour around the corner. So brace yourself for it. It's going to be a really exciting evening. Let me see if I've got any information coming in. Nothing specific yet. After the bell, we'll probably get something. All right, which is in about 3 minutes time. Let's look at my portfolio. Yeah, look at that. My Coca-Cola now is doing its thing. There it is. Yep, there it is. There it is. It's going to go to $90. It's exactly what we expected. Not really a surprise. I don't even need to look at it. We're focusing on Plug Power right now. Anyway, here is fact number 8. Plug Power is trying to build America's hydrogen highway. What do we mean by that? So let's zoom out from the drama and talk about that and talk about what Plug Power is actually trying to build, because the ambition here is genuinely staggering. Okay, the company isn't just selling fuel cells anymore. They are attempting to create a vertically integrated end-to-end green hydrogen ecosystem, production, liquefaction, and distribution infrastructure across the US and Europe. They want to make the hydrogen move the hydrogen. I'll say that again. They want to make the hydrogen move the hydrogen and sell the hydrogen at scale. If it works, Plug Power isn't just a product company, it's a critical infrastructure for the energy transition. And if it works, and that's the biggest if on the NASDAQ right now, okay? Fact number 9, we're nearly there. We're just half an hour to go. We're going to go to live Q&A in a few moments. We're going to answer questions, put your comments on the screen and all the rest of it. So fact number 9, cash is the enemy and Plug Power has been burning it fast. Here is the problem. Here's the bull and bear tension in its purest form. Revenue growing. Plug Power has increased revenue year over year. The technology works. The customers exist. Profitability still elusive. The company has burned through enormous amounts of cash. The going concern warnings that appeared in 2023 shook investor confidence hard. The bears say this is a company that can't survive without constant capital raises. And there's the problem. Now, here we go. Here's our first moment. There we go. Watch it now. Look, it was up 15% a couple of seconds ago. Now we're on 12. We've already dropped 3% in seconds. Be careful. I warn everyone. The entry point for me is around the $2. The economics never work. This is what the bears say. They walk away. The bulls say, however, every major energy infrastructure company in history burned cash in the build phase. This is true. Absolutely right. The payoff comes later. Early pain is the price of leadership. They're absolutely right there. Which side is right? That's what the earnings numbers are all about to tell us. So in 30 minutes, the bell's about to go in 30 seconds. You'll watch it move on the bell. You watch. Which brings me to fact number 10, the one I've been building towards this entire live event. Okay, you ready? Fact number 10. I'm going to wait a second because we're going to watch the bell. Here we go. This is my portfolio. Let's have a look. We got crypto all going up because of the Clarity Act on Thursday. We've got the S&P bouncing up and down and VUG trimming off. 10 seconds to go. Coca-Cola is doing exactly what it was bought to do. Defensive play, and it's going to go to $90 and turn my portfolio into $800,000 live on the show. Let's watch. The bell is just gone. Here we go. The bell has gone. You can see I'm up today. I think I'm beating the market. Let me have a look. The market, yes, I am. I've more than doubled the market again. Always beating the market. So here we go. The market today is up 0.23. I am up on my portfolio 0.4. I've doubled the market again. Hurrah for me. Martyn wins again. Okay, it's getting a bit silly, really. It's been like this for 3 years. For 3 years now, I've consistently beaten the market and beaten Buffett, the S&P 500, hedge fund managers, 3 years in a row. And I teach all of my trades and show all my trades on Discord. If you want to join me, there's Discord, or I show them in YouTube Electrum as well. There is the membership there. Okay, let me go back to plug my portfolio. I don't even need to worry about it. I'm not even bothered. I know it's going to $1 million live on the show without doing anything at all. Well, a little bit of trimming here and there. But anyway, fact number 10. There goes plug power. This is exactly what I warned you about. Let me give you the numbers. We're getting some numbers out. Be very careful. This can go up 50%, down 50% in a blink of an eye. And it does. It's very exciting, but I'm not gambling as long as there's manipulation all over it. It's just a Russian roulette game, and I'm not playing it. So you can watch it now violently go up and down. So here is fact number 10. All right, we've been building to this, okay? Plug Power isn't just a stock. It's a referendum on what America believes about its energy future. Okay, and since Trump's come in, it's changed again. All right, here's what I want you to understand as we keep our eye on the stock. We'll go in and out of it, and this is what separates people who truly get Plug from people who are just trading, gambling, and looking at the ticker. They don't understand what they're doing. They might as well go to a casino. And there are people who play this more than any other stock on the market. It's unbelievable. Plug Power has become a battlefield stock, but not just a financial battlefield, a cultural one. And there we go. Look at that. Look, we're down 4% already. Now we're up again all over the place. A cultural one. It's clean energy versus fossil fuels. It's retail investors versus Wall Street short sellers. It's long-term vision versus short-term quarterly thinking. It's an American hydrogen leadership versus global fossil fuel dominance. Every earnings call isn't just a financial report. It's a vote on whether the vision survives another quarter. And that is why this stock moves so violently, because it's not priced on maths alone. It's priced on belief, on narrative, on emotion, on what people think the world is going to look like 10 or 20 years. If you understand that about Plug, you'll never be caught off guard by its moves again. And now we're going the other way. Look at it. Look at that. Now we're up 6%. You see what I mean? This is one hell of a Russian roulette. I'm not playing it. I'm not risking all my money going to zero, because this is what can happen tonight on this stock. I've warned you about it. I've warned you about it. I promised you a violent earnings, and a violent earnings has been delivered. So the swings make sense when you realize this isn't just a trade. For hundreds of thousands of retail investors, owning Plug is a statement. It's a statement. So now that you know the full picture, now it's back down again. Look at that. You cannot time this. You cannot time this. People are playing this. It's just an absolute nut show. All right. Now you understand the full picture. Partnership, the full partnership in history, the SEC charges, the cash burn, the geopolitics, and what this stock really represents. You're ready for the numbers. We got 23 minutes to go. When Plug Power reports, here are the 3 things that I'm watching first. I'm not even going to play around with this. I might buy it again at $2, but not until then. Okay, I've done it before. One, revenue growth trajectory. Is the top line still climbing? That is what we're interested in. Or are we seeing deceleration? Number 2, cash position and cash burn rate. And now we're going the other way. Whoa, now we go down. You see that? I mean, it's swinging like 10% either way all the time, and it's just warming up. It could go down 50% in the blink of an eye and up 50%. How much runway do they have? Well, how much? We'll find out shortly. And any more going concern language is a red flag. 3, guidance and management tone. We're looking for the way they speak. Andy Marsh, you'll be sitting drinking whiskey. You'll hear it. You'll go, oh my God, what is this all about? Are they still confident? Do they have production milestones hitting? Is this another we're making progress quarter with no hard commitments? They say it on every quarter. Watch for all of these points, because all 3 of these will move the stock. So before we get into the live numbers, I want to say this. We went deep today on Plug Power. I showed you what the Plug Power is really about. I gave you 10 facts, the history, the drama, the charges, the mission, the cash burn, and what fact 10 means for how you read the stock going forward. Is this grave? Sorry, I beg your pardon. If this gave you clarity, and I use the clarity for a specific reason, because it's the clarity vote this week. If this gave you clarity, if you feel you understand now, please get prepared, sit back and relax, and maybe you fancy tapping the like button. Plug Power have been asking you all the way through to tap the like button and consider subscribing. The reason why I put Plug Power asking you to hit subscribe and hit the thumbnail was a bit of a nod to all those that try to manipulate me by offering me silly amounts of money from Russian oligarchs, and I said no. So I thought it'd be quite funny that I build into my slideshow that Plug Power are asking you to tap the like button. It's a little nod to those who have tried manipulating me with money and bribery. I thought it was quite funny. Most of you probably wouldn't even notice that, but it's just a little nod to what goes on behind the scenes. All right. My portfolio is up. We're beating the market again, looking really, really good. Hang on a minute. I've got a little announcement here. Let me leave it on that screen. Very strange. Okay, just seen a very strange message on the screen. Very odd indeed. It's all kind of weird that I'm mentioning all this, and it's all doing some weird stuff. But anyway, I'm not going to worry about it. There is very odd. I just saw some very strange things on my screen. Anyway, Plug Power. So we're beating the market again today. Crypto's going up. Coca-Cola is doing exactly what we expected it to do. That's great. But today we don't even need to look at that. We're not bothered about that. We can focus on Plug Power. So let's keep our eye on Plug Power. Now we're down again. Now we've got 20 minutes to go. In a few moments, we will open the call and we will do our earnings call. Let me now go to the chat. All right, let's have a little look. All Logic, it's past my bedtime, sadly. Have a great show. Thank you, All Logic, for being here. Terry Rose, hello, friends. Stephen Lewandowski, good evening to you. Hi, Henrik. Lovely Henrik from Denmark. Hi, Stephen. Bought it at $2.80. Yeah, I'll be buying around about the $2. Great. Already you've earned. Absolutely. Take your profit. Just take your profit. That's all this is, a merry-go-round. Yes, I've been in and out of this stock a few times and made good amounts of profits. Yes, congratulations, Henrik, to you. I think it was you who brought me this stock. I think it was somebody in Denmark brought me this stock and told me all about it. I never knew about it until that moment. If it dips, I'll buy more. If it runs, I'll just hold what I've got till I see consistent earnings growth. Good luck with that. The same here, said Henrik. Okay, good day, says Jacko. Cheers, everyone from Bacalar. Bacalar, lovely to have you here. Too late to buy. Oh, yeah. Normally, we would see a big sell-off today. Let's see what happens, FinK. I'm hoping for good earnings and a short squeeze. Let's look at the numbers for you, see if we can get a short squeeze. Let me give you, and I'll tell you if we're going to get a short squeeze or not. It's very reliable numbers. So if we go plug, I can tell you if there's going to be a short squeeze. No chance of a short squeeze at all. If you're holding out for that, you can whistle. It ain't going to happen. And I'll tell you why. So average volume is 70 million. We've got just over double the average volume, which is expected on earnings. Right? But we've only got 25% short interest, which is a lot. It's excessive. It's short squeeze territory. But when GameStop went parabolic, it was 100% with massive, like 20, 30, 40 times volume. This is just double. And it's just normal for the earnings. So it's not. If you want a short squeeze, we want somewhere in the region of 40% and upwards short interest. We've got 24, so we're way short of that. And we need at least 300, 400, 500 million volume. We're nowhere near. So we're not going to see a short squeeze tonight. I'm 100% certain of that. So don't get too excited if that is what you're hoping for tonight. It's not going to happen. There's nothing to indicate it at all. And with short squeezes, it really is that simple. It's not like they're just going to come out of the air and surprise everybody and like, oh, that's amazing. Unless, of course, there's in one moment, there's a giant, huge buy-in. I mean, something massive. And that can happen, of course. So never say never. But to expect that in this current climate would be a little bit unusual. But then this stock is unusual. It will swing, but will it short squeeze? I don't know. I can't see that. All right. Anyway, we are seeing it starting to go up again now. Be careful if you're buying this. I would strongly suggest against it. It's not financial advice. I don't give you financial advice. I just share with you what I'm doing. But I certainly... yeah, they're still losing money. The numbers just come in. Estimated to be losing money at 10 cents a share, and they've beaten it slightly. They're losing 8 cents a share. So the company is still losing money, still not making money, and it's improved by nothing. It's the same as always. Nothing's improved. Nothing, the same position as always. The earnings has gone in a straight line now for like 2 or 3 years. Here we go, look. Now we're going up like 6%. Oh, my God. Oh, look at this. That could just drop 10% straight away. If you've just made 10%, take your money. And there you go, 8%, 8%. Whoa. 8%. Remember I said to you it could go up 50%? 8%, coming up 8.5%, 9%, 9%. We could be 10%. Look at that now. This is not a short squeeze, folks. Short squeeze, it'll be like $6, 7, 10, that kind of region. 9, coming up to 10%. Whoosh. Look at that. Take your money and run. Take your money and run. I'm trying to warn everybody. I don't want to see anybody lose money. Did we know about this? Did you know about what? Like the like button. Like the like button. I like the like button. Boom boom, says Liz. Wow, says Amano. It's good. First move is fake, so we go up today. Now we're up nearly 10%. We were down like 10 a minute, like 5, 6%. That's a 15% swing now in like the last 10 minutes. Madness. Yep, in seconds. Yep, this is one of the most craziest manipulated stocks you'll ever see. Andy Marsh is not the... Oh, he's not. He stepped down now, is he? Is for all the drinking. Jose Luis Crespo. Oh, is he? Okay. Thank you for sharing. I look forward to hearing from him then. I'm just ashamed because I enjoy Andy Marsh. It's always quite funny. No more Andy Marsh on the call. That's a shame. It will rise today, said Do One. Do One, okay. 12.5%. That's a funny name, isn't it? To dive. Double beat on earnings. Double beat on earnings. How do you see that? Stop spending odds messages. Stop sending odds messages to Martyn, says Liz. 10% in at 109. Oh, very nice, Kyle. Very nice. You've got a great price there. Archer is a beat. Yes, I believe Sensei is covering Archer Aviation. We got a super chat. Double beat for Plug Martyn. Double. What do you mean double beat? I'm not really sure I know what you mean by that. 11% up now.
K tip €2 to super chat. Double beat for Plug Martyn. Winking face emoji.
Whoa, 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 look at that. A double beat. I'm not quite sure I know what you mean by double beat because they're expecting to lose 8 cents a share. They're losing 10 cents a share. They're losing 8 cents a share. I mean, they're still losing money. They're beaten by the smallest amount. I don't know what you mean by double beat. Could you explain what that means? All right, now we're going down oh my God. We were up 10%. Now what we're going to do? We've got 15 minutes to go. Let me refresh the screen and we should have the call laid out now on the deck from Plug Power. So let me refresh it. At 15 minutes past, we should have the presentation. Let's have a quick look. We're just waiting for it to populate. And there we go. You can hear the music. Okay, I'm just going to mute that. There is no presentation at the moment, but we've got there's just a blank screen. That's all it is. But anyway, this is going to be an interesting event tonight. I am now. It's go. See what I'm saying? Take your profit. Take your profit, for God's sake. All of a sudden, we're down 20%. Right, bought options on Amprius, said This Way Def Gaming. Short squeeze incoming. No, there's not enough volume. Archer up 8% after hours, DJ Hayes. I'm loving it. Archer is pumping. Archer is pumping. Let me show you. ACHR. We are covering this at the same time. We're doing two earnings and not. I wouldn't say Archer's pumping. It's up 4%. It's okay, but I wouldn't say Archer's pumping. In my opinion, a speculative stock like this up 10% like Plug, then yes, but not 4. Now it's 4.5. Oh, 4.5. Now we got something. Archer Aviate. We're going to cover this in about 30 minutes. Sensei is going to cover this on the same channel at the same time. Very exciting. We're doing two earnings back to back. But right now we're focusing on Plug Power. Going back down again. We've got 12 minutes to go now before the earnings begins. Let me see. Beat estimates. Yes. Yes, 0.08 compared to I don't see what you mean by double beat though. What does that mean? Archer Forever said tricks. It's good guidance. It's extremely strong. Do one. Yeah, I can't keep shouting that out, can I? Take your profits. Yes, I would have certainly done. Archer earning out. It's popped up. It has, Nick. Yeah, we're covering it. No need to sell. Just hold and enjoy. Well, you say that, but if you don't want to lose your money, I would always be happy to take 10% on nothing good news at all. So anyway, the photos of Archer shareholders' letter are amazing, said Trix. Thank you very much, FinK, for the super chat. That's absolutely amazing. Archer now is up 4.5%. It's going. It's good. It broke resistance at 341. The chart means nothing on this. It doesn't. It's just all manipulation. It broke resistance. It's interesting, but it means nothing. It can go straight back down again. Just sold 5,000 shares at $4. Absolutely fantastic. That person there, Nicolash. That's the way to play it. Congratulations. I mean, if you could buy it for $2, that's where I bought it for $1.50, I think it was once, and I made a lot of money on it. That's the time to buy it. This is now just Russian roulette, and I mean that literally. Just sold 5,000 shares at $4. Congratulations to you. Kyle is here. Well done, Plug. A very small beat. Beat on estimates for EPS and revenue. So they are improving, not a beat, but for Plug, it's good. I know where you're coming from, FinK. I know where you're coming from, but the market will expect a lot more than this. Remember, we've been as low as like 150 or whatever, and as high as 70. So Agree says, do one. My $4 sale doesn't show in the chart, highly oddly. No, that's understandable. Because the chart is only smoothed out, right? It doesn't show that, right? The stock is moving violently. You don't even see it. That's why you should always set a limit order. And if you don't, you're missing out, all right? If you just go sell or buy, you're always going to get the worst price. Double beat also, double beat is not something you want to sell, guys. Not sure why this guy is saying sell and take your money. You're not sure why this guy is saying sell. Well, because I've watched this stock now for 4 years. I've covered all the earnings. We've had the interviews with the CEOs. Yeah, I mean, I'm sure you want everyone to hold it because it's going to go to $1 million and all that kind of stuff. But no, the people that are behind, I mean, the management's fine, but the people that are pumping and dumping this, Russian oligarchs, the manipulation of this stock is just off the charts. Plug is okay, says Yoy Toy. Hold or sell? I couldn't say. Momentum for Plug is to come. Anybody selling is loony. Well, of course you'd say that because you want everyone to buy it and hold it, right? I cannot possibly say what you should do. I'm just sharing you my real world experience. I have had Russian sponsored influencers try to take over my channel, try to manipulate me, offer me money to get me to join Facebook groups, to say it's all great, and I won't. Well, we'll offer you more money then. No. How much money? Everyone will say something for enough money. Not me. You could offer me $1 million and I still won't say it's good if it's not. That's why this channel isn't sponsored. We're the only 100,000 YouTube channel. In fact, we've got 4 channels, all successful, and we take no sponsorship from anyone. And I could earn millions on sponsorship, but I take none of it. I won't be sponsored or blackmailed by anyone. Now you see it going back down again just as violently. I did recommend everyone take their profit. Anybody selling is loony. Well, if you've just bought the bottom and you just had a 15% swing in 5 minutes and you don't sell, that's what you can make in a year on the S&P. I think you're loony if you don't take that. So anybody selling is loony. I'll just remind you, CSW, with 8 minutes to go, when you say it's loony to sell, let me just give you these statistics. So for 3 years in a row, I've beaten the S&P. For 3 years in a row, I've beaten Warren Buffett, Berkshire Hathaway, all the metrics and hedge fund managers. And I started, look, this is real time, real life, as it happens. This is my real money, my real situation, all of it here, right? And I started with $5,000, $5,000. I'm now at 722. No options. No shorts, no guessing, no gambling, and I'm still out of the money on crypto. How about that? So don't tell me it's stupid to sell when you've just made 15%, because I do it all the time, and now I'm at 722. I never sell the top. I don't even try to sell the top, but I always buy the bottom. Using tax lots, using tax harvesting, repositioning, I always get the bottom. And do you know how I've made 722 grand? How I made all that money? And that is all from the S&P 500 and a little bit of Google and Nvidia, but a tiny, right? And Coca-Cola. Simply buying at the right time. And you can time the market, and I do it all the time. And I share it and I show it explicitly in my Discord server every day. I do live events and explain it to people, show them my trades, all my trades, every single trade shown publicly live on the show. Okay? So there you go. Right, Plug Power. Plug Power is selling off again just as fast as it went up. It's exactly what I said was going to happen. So let's have a little look. Troll King, I'm happy with Myron holding it before the Ramageddon. I'm not sure I know what that means. Sounds good though. You have a good memory, Martyn. Almost 3 years. And Plug Henrik, you have a good memory, Martyn. Almost 3 years ago. Yes, I remember Henrik very well. For the longest time, you weren't a member. And then you became a member, and you've been a member ever since. And I remember you bringing me Rocket Lab, which is a great business. I remember you bringing me Plug Power. Yeah, very exciting stuff. And I thank you for it. Yeah, it's a wonderful community. Oh, here we go.
At Claycribs 2581 tipped $9.99 through Super Chat. Thanks for staying true to yourself. I'd like to see an analysis on IBM.
IBM. Was that IBM? Yep. Okay, I can do that for you. You are a member. And $10 super chat. Yep. IBM. 10 facts analysis booked in for you, and down goes Plug Power. Well, there you go. Wasn't that a surprise? Let's have a look. You have a good memory. In fact, my memory's rubbish. I just remember odd things like that. Russian oligarchs are broke since the Ukrainian war began. Make Plug great again. That's not true at all. That's absolutely not true at all. There's plenty of money in Russia right now. In fact, there's more money in Russia right now than there was. So don't be fooled thinking, Trump says Russia's broken. No, it ain't. How do you think the war's still going on? Russia carries on doing it. They got plenty of money. Trump said he'd end the war in 5 minutes. Carries on. Trump said we'd end the war in Iran in 2 weeks. Nearly 3 months later, nothing's happening. Oil's going up, inflation's coming, recession's coming in October, carry trade's coming in October, markets booming, Trump said. Well, in fact, we're only up 6% on the year. It's a below average year. That's the facts. So Russians aren't all bankrupt. Russia's not all broken. Not at all. Okay, it's not the case. Grand Tour, look what happened to SoFi and countless others after double and even triple beats, says Nicholas. It's loony not to sell. Yeah, exactly. You'd have just lost. You can buy it back now if you want. Look at it. Look at that. Absolutely bonkers. Absolutely bonkers. If you can get free money out of this, take it. It makes no sense. The stock is not justifying the price at all. Martyn Lucas, the GOAT, timing is everything. It is. And I always get the bottom. I have done for 3 years in a row. All my claims have been spot on. All my numbers have been spot on. My predictions have been spot on. My trades, my wins. I've beaten everybody. So look at that. There you go. Now you can buy it again if you want. If you've just made 10%, have a go again now if you want. I personally wouldn't. I'd walk away from it and go, I've just made 15%. I'm out the door. Thank you very much. How long did it take you to get to 4.5 years? It'll be 5 years in June. 5 years in June. Solana nearly breaking 100. Thank you, Stu. I'm over 30% on my ASTX. Congratulations to Joey. I'm really good over the last month. My best play was AMDL. Congratulations, Protector. Thank you, says Clay Cribs. No, thank you very much for the support. Right, 2 minutes ago, earnings call. I just discovered Andy Marsh is no longer the CEO. I'm gutted about that. I loved it. He come on. Hello. All right. Yeah, he's... I was going to get me a whiskey out, but never mind. I do enjoy an Andy Marsh presentation, but it won't be the same tonight. He won't be the same. I used to quite enjoy it. It was like a bit of a laugh. You never knew what he was going to say. You all right, mate? Yeah, I'm all right, mate. Bloody marvellous. It was all that stuff going on. It was pretty mental, really, but it was fun. Anyway, so let's get ready to rock and roll. We've got the 2 minutes to go. And we've also got Archer earnings as well. Very exciting stuff. Archer earnings as well. Stand by for Archer Aviation. That's coming up tonight as well. All right, here we go. 1.5 minutes to go. Expect a slight delay. It does happen. We'll see what happens, and it is what it is. But yes, exciting night. So I've just got a chance to tell you about a few things if you'd like it. Here we go. First of all, if you want to follow me on X and Instagram, I've had some. I post all my thoughts on X and Instagram for you. And Instagram, I've gone viral a few times last few days. We started at no followers just a short while ago, and we're nearly at 4,000 out of nowhere. Expect it on the trajectory to 10,000 in a couple of months. It's been absolutely nuts. If you want to follow me on X and Instagram, there are the links. If you want my Discord, there will be a Discord event again today after we've done all this. 2 events a day. I share all my trades with you. Always winning. You can see by plug power. I told you to get out. If it goes back up again, you're going to go, oh, you should have stayed in. Sell and buy back if you want to. Did try to tell you. Anyway. If you want to see all my trades, I share all my trades with you. I teach you how to do tax lots, tax harvesting, one-on-one service, no bots, no AI, no trolls, just me and my team. If you want to join me on Discord, others charge $1,000 for what I do. I charge $2.99. No price increase, no inflation ever. All my memberships on YouTube are the same. They never go up in price ever, never have done in nearly 5 years, and they never will do. I make money from investing, so all my services are provided for virtually free. Time we take out the tax and the commission to YouTube or Discord, it's $1 a person. That's about it. But I'm happy to do it because I like helping people. And that's why when you get into Discord, you'll be presented by an invitation, and we only accept 1 person a day. Right, here we go. Whoa, that's a bit loud. Let me mute that. They're playing some rock and roll over there on Plug Power. I think Andy Marsh is back. Whoa. How loud is that? Right. We're ready to go. Plug power. Stand by. Yay. Mute. Here we go. Plug power around the corner. So I just suggested you could have bought back in again and done the same thing again. There you go. Look. It's going right back up again. You could have made the money twice now. Oh, we got a nice presentation. We got maybe a presentation. We might have a presentation. Let me just mute that. Let me mute that. Okay. We might have a presentation from Plug Power.
Greetings and welcome to the Plug Power First Quarter 2026 Earnings Conference Call and Webcast. At this time, all participants are in listen-only mode. A question and answer session will follow the formal presentation. You may be placed in question queue at any time by pressing *1 on your telephone keypad. We ask you please limit yourselves to 1 question, 1 follow-up, then return to the queue. As a reminder, this conference is being recorded. If anyone should require operator assistance, please press *0. It's now my pleasure to turn the call over to Vice President of Marketing and Communications, Teal Hoyos. Please go ahead, Teal.
Thank you. Welcome to the 2026 First Quarter Earnings Call. This call will include forward-looking statements. These forward-looking statements contain projections of our future results of operations or of our financial position or other forward-looking information. We intend these forward-looking statements to be covered by the safe harbor provisions for forward-looking statements contained in Section 27A of the Securities Act of 1933 and Section 21E of the Securities Exchange Act of 1934. We believe that it is important to communicate our future expectations.
Apologies for the audio. She seems to be coming away from the microphone.
Investors are cautioned not to unduly rely on forward-looking statements, as such statements should not be read or understood as a guarantee of future performance or results. Such statements are subject to risks and uncertainties that could cause actual results or performance to differ materially from those discussed as a result of various factors, including but not limited to risks and uncertainties discussed under Item 1A Risk Factors in our annual report on Form 10-K for the fiscal year ending December 31st, 2025, or quarterly report on Form 10-Q reports we file from time to time with the SEC. These forward-looking statements speak only as of the day in which the statements are made, and we do not undertake or intend to update any forward-looking statements after this call as a result of new information. At this point, I would like to turn the call over to Plug's CEO, Jose Luis Crespo.
Thank you, Dil. Good afternoon, everyone, and thank you for joining us on our first earnings call of 2026. The first quarter results we announced today represent another important step forward in achieving the objectives we laid out for the year, delivering positive results in the fourth quarter and sustaining revenue growth directionally consistent with 2025. In the first quarter, revenue increased 22% year-over-year to $163.5 million, with growth across each of our three strategic focus areas: material handling, electrolyzers, and hydrogen fuel. Gross margin also improved substantially year-over-year, increasing from -55% to -13%. This represents a 42 percentage point improvement in gross margin. The cost actions initiated under Project Quantum Leap are now substantially flowing through our P&L, and we expect gross margin to improve sequentially through 2026. This is supported by a combination of volume leverage, mix, and continued cost discipline. In material handling, we continue to see a strong customer engagement driven by the combination of proven productivity gains, improved product reliability, and reduced dependence on electrical grid. In addition, the reinstatement of the investment tax credit earlier this year has improved the economic attractiveness of hydrogen-powered solutions for many customers. As a result, we continue to project increasing demand from both Amazon and Walmart through new deployments and fleet refresh programs, with activity levels increasing across both existing, including our automotive customers, and new customer accounts. Our electrolyzer business continues to demonstrate a strong commercial and operational momentum. Electrolyzer revenue increased significantly, growing from $9.2 million in the first quarter of 2025 to $40.8 million in the first quarter of 2026. This reflects the timing of specific project milestones across our portfolio, with multiple large-scale projects now advancing through commissioning and delivery phases. We're currently in the commissioning phase of the 25 MW project with Iberdrola and BP in Spain, and we are finalizing installation activities for the 100 MW project with Galp in Portugal, two of the largest PEM electrolyzer projects currently under deployment in Europe. In addition, we recently announced the award of the front-end engineering design work for the 275 MW project with Hy2gen in Canada, further strengthening our global project pipeline. We're also seeing continued advancement from Allied Green Ammonia on the 2 GW project in Uzbekistan, where several important milestones were achieved during the quarter. In April, Allied Green secured a binding project implementation agreement with the Uzbekistan government, establishing the tax and customs incentive framework supporting the project. Just this past Friday, Allied Green signed a memorandum of understanding with Uzbekistan airports to collaborate on SAF and eSAF deployment initiatives. We're seeing increased activity across our approximately $8 billion electrolyzer opportunity funnel, especially within the aviation sector, where fuel availability due to the ongoing energy supply constraints and geopolitical instability affecting global fuel markets is renewing the interest in energy security and synthetic fuel production. Our fuel business delivered approximately 20% top-line growth year-over-year, driven primarily by new material handling site deployments, and with margin improving by 54 percentage points year-over-year. We continue to improve plant performance, logistics efficiency across the network, and plant utilization. We still have a lot of work to do, but we are advancing in the right direction. From a liquidity standpoint, we ended the quarter with $223 million in unrestricted cash and $579 million in restricted cash, for a total cash of $802 million. We continue to advance multiple asset monetization initiatives, including stream data centers, that are expected to generate more than $275 million in additional proceeds, with the first transaction for approximately $142 million expected to close in June. Our first quarter results represent another important step towards achieving our stated objectives of positive EBITDAs in the fourth quarter of 2026 and advancing our broader path towards long-term profitability. The foundation is in place. Our focus is now execution, margin expansion, and converting scale into sustained profitability. With that, I'll now turn the call over to Paul, our CFO, for a more detailed review of the quarter financials. Paul?
Thanks, Jose Luis. Let me start by emphasizing a few key of the takeaways for this call. First, demand across our core platforms remains strong, driving 22% year-over-year revenue growth. We continue to drive margin improvement, and the year-over-year progress reinforces our belief that we've hit an inflection point. And lastly, we believe we have more than adequate capital to fund 2026 based on our existing cash position, through ongoing operational improvements, the varied asset monetization efforts, significant reductions in CapEx, and the quarterly restricted cash releases. Now let me dig a bit deeper into the sales growth. Year-over-year sales growth stemmed from traction across all core platforms and reflects strong customer interest, which positions for continued growth throughout 26. Q1 results also stem in part from the timing of program deliveries and our conscious efforts to pull programs forward where possible. We will continue to focus on accelerating programs, but as of today, we think the first half will be in the 40% range for the full year in context of our overall guidance of the full year sales growth of 13 to 15%. More specifically, excluding charges for customer warrants, year-over-year material handling platform grew by 15%. Our electrolyzer platform grew by 343%, and our hydrogen fuel sales grew by 10%. There will be ebbs and flows as we progress through 26, but these results are indicative that we continue to expand our core markets, and we expect all the core platforms to continue growing. Regarding margins, the improvement we delivered in Q1 stems from a culmination of ongoing efforts to optimize and scale the investments we've made. We've made a conscious effort to focus on margin and cash flow improvement, and that includes the actions undertaken based on our product cost down roadmaps and conscious efforts to increase leverage on our OpEx cost. And what you're seeing in Q1 is how those efforts are clearly showing up in the underlying economics of the business. On a year-over-year basis, gross margin improved by 71%. The drivers are the same ones we've been talking about. First, sales growth drives operating leverage across the platform. Second, service continues to improve with quarterly per unit GenDrive service costs down more than 30% year over year, driven by improved stack reliability and the pricing actions we continue to undertake. Third, our fuel margin rate improved by approximately 54 percentage points. We're getting better leverage out of our hydrogen platform, driving enhanced network efficiency, and the third-party gas sourcing agreement we signed last year continues to deliver cost downs. Still a lot of work to do, but these structural improvements are driving the right direction. Equally important to these overall results is the fact that we see continued progression as we drive towards our 26 financial targets. We expect a full year of benefits from the actions undertaken last year, and we anticipate continued improvement. Incremental leverage from growth in sales given our installed capacity, continued improvements in service cost profile, additional improvements in fuel efficiency and network leverage, and continued scrutiny over OpEx. Given these continued efforts, we expect the margin break-even threshold to continue to lower given traction and cost downs and our increasing ability to get more out of the platforms we have. Turning to cash, as a reminder, Q1 has historically been our heaviest cash usage quarter, given the seasonality of sales and timing of working capital flows. Q1 of this year is consistent with that pattern. There are two things I'd flag specifically. First, we made strategic buyouts of certain operating lease liabilities associated with our legacy PPA business during the quarter, which added to outflows, but is a net positive for us going forward. This is based on a conscious effort to accelerate the wind down of the PPA business model, and these efforts will be accretive to margins and cash flow going forward, and serves as a means to accelerate the release of restricted cash reserves. We expect more of these transactions as we progress through the year. And second, the underlying burn in Q1 tracked moderately better than our internal plan. We ended with over 10% more cash than we initially anticipated. This stemmed from many factors, including ongoing focus on margin enhancement and working capital leverage. We expect sequential improvement in cash usage across the balance of the year as we move towards our target of positive EBITDA run rates in the Q4 of 26. CapEx was very nominal in the quarter, only about $7 million, which is consistent with what we said on the last call. Our hydrogen production network is built. We're now in a leverage the asset base phase, and the CapEx run rates reflects that. It postures us really well because as we talk about getting to an EBITDA positive run rate in Q4 26, the combination of margin progression and a very low CapEx run rate mathematically puts us in a position where the cash burn for the year is very manageable given our capital resources and liquidity management plans. On liquidity, we ended the quarter with over $802 million in total cash. That's a $223 million in unrestricted cash and cash equivalents, and approximately $579 million in restricted cash that is expected to release at a rate of approximately $50 million per quarter over the next several years. On top of that, we have several specific levers tracking through 26. The first is the asset monetization program we announced in the fourth quarter of last year, which includes the expected steam data centers transactions. We expect approximately $275 million in aggregate proceeds from these hydrogen project monetization efforts. In addition, we're underway with the sale of the Section 48 investment tax credit associated with the St. Gabriel joint venture, the platform we have there in Louisiana. That's $39.2 million in total, currently targeted to close by the end of May. We have an effectively unleveraged balance sheet given the debt restructuring we did in Q4 of last year, which also lowered our cost of capital and extended our maturity profile. So we have optionality. Our working plan is that the existing capital plus the expected asset monetization proceeds, coupled with the restricted cash release schedule, we believe collectively will provide adequate capital to fund the operating plan for 26. Our adjusted EPS for Q1 26 was negative 8 cents compared to adjusted EPS in Q1 of 25 of negative 17 cents. Excluded from our adjusted EPS in Q1 26 is approximately $140 million in primarily non-cash charges related to adjustments for convertible debt and warrant valuations associated with changes in the stock market and the company's stock price escalation. I think the progression in the adjusted EPS is illustrative of how operationally the company is making real progress. To wrap up, Q1 was another step on the same trajectory we've been on. We're growing the top line. We're delivering structural margin improvement. We're being disciplined on operational expenses and CapEx, and we have multiple identified levers to fund the operating plan for the year. We continue to be laser focused on driving margin and cash flow improvement and achieving our fourth quarter goal of positive EBITDA run rate, which sits within the roadmap Jose Luis described, including positive operating income in 27 and full profitability in 28. With that, I'll turn the call back over to Jose Luis.
Thank you, Paul. So now we can go on the question section of the call.
Thank you. We'll now be conducting a question and answer session. If you'd like to be placed into question queue, please press star one on your telephone keypad.
If you can tap the like button, that would be great. I got highlights coming out on Instagram, X, and my shorts later. All the key points, analysis to go alongside it as well.
As a reminder, please ask one question and one follow-up, then return to
please
the queue.
tap the like and subscribe. Thank you.
Our first question today is coming from Colin Rush from Oppenheimer. Your line is now live.
Here are the links for Instagram, X,
Thanks
Discord,
so much,
and YouTube membership.
Jose Luis,
Thank you.
You're close to all these European customers. It's good to see some of the progress that you're seeing on the electrolyzer side. I'm just curious about, urgency and what you can comment on that pipeline starting to move towards, final investment decisions besides the projects that you've talked about, and how we could think about that, starting to materialize here later this year and next.
We continue working on, as I mentioned, on all the projects that we have in the funnel. These projects are quite complex, as you know, Colin, and they require a lot of different parts of the projects to align to get to FID. I'm just going to give you an example. I have a project in Australia. It's a 15 megawatt project, 50, and the project is completely approved by the financial committee of the company that I'm working with, and there is one permit that they need from a port. Is an easement permit that is actually holding the FID of the project for a month or so. The project is going to happen, but there's some bureaucracy around it. So my point is that there is certain level of complexity getting all the things aligned on the FID of the projects, and it takes time to get them to the point of final investment decision. We have a lot of projects now in the last quarter in the ESAF industry that have started accelerating. As you can imagine, the situation in Iran has created an issue with the availability of jet fuel in many areas of the world. But in Europe, companies like Ryanair announced a couple of weeks ago that they will have limited amount of jet fuel available to run their operations, and they could run out of some of that fuel by the end of May, beginning of June. So this is leading to many companies actually pushing towards trying to accelerate these type of projects. Energy independence is becoming also, and security is becoming also, again, an important item in Europe. And we see that these projects are beginning to accelerate a little bit more than what we were seeing a couple of quarters ago.
That's super helpful. Thanks, guys. Paul, just on the cash, two questions. Just in terms of OpEx run rate on a cash basis, should we think about this first quarter run rate being stable here going forward? And then secondly, the inventory levels continue to remain relatively high. I'm just curious about how quickly you might be able to start drawing those down in a real meaningful way.
Thanks, Colin. Yeah, on the OpEx, there was a few charges in there that won't repeat. So, we're targeting roughly $75 million per quarter is where we expect that to land in. And we're working hard to provide a lot of scrutiny over that so we can keep it contained and not grow that investment base. On the inventory, there was a slight, reduction over the quarter, but the reality is where you're going to see the big movement this year is over the balance. Each quarter we expect to grow sequentially, and even more so in the second half. And so we're targeting about $100 million reduction minimum this year in overall inventory levels, and we're working hard to beat that target. So, but I think you'll see the majority of that play out in the second half.
Perfect. Thanks so much, guys.
Thank you, Colin.
Thank you. Next question is coming from Jason Tilchen from Canaccord Genuity. Your line is now live.
Good afternoon, everyone. Thanks for taking my question. I think last quarter and even in prepared remarks, you've talked about the value proposition for the materials handling solutions only getting stronger with rising electricity prices. Just curious, can you talk a little bit more specifically to some of the conversations you've had with the prospective customers, not necessarily some of the core pedestals, but some of the ones that are either smaller current customers or prospective customers, and how those conversations have evolved over the past few months? Thanks.
Hi, Jason. Thank you for the question. So mainly is the conversations are always around productivity, or that's our traditional value that we bring to the table. The addition of ITC or the renewal of ITC, it definitely helps in the business case. But in the latest type of conversations that we're having with customers, there's an addition, which is the reduction of electricity demand on the site. Usually in a site with 200 forklifts, you can reduce the demand on the site by 2 megawatts or so. And that is really helpful given the constraints of utility power that we're seeing, in the country due to the demand from other industries like data centers. So that is a huge value for customers. Added to our traditional value on productivity gains, it creates an additional tailwind for the business case. That is the main topics that we usually discuss with new customers and even with existing customers.
Great, that's really helpful. And then just one follow-up in terms of the gross margin improvement. I believe you called out specifically the GenDrive service cost reduction. Can you maybe talk to some of the specific operational improvements and blocking and tackling that you've done that are really driving those savings there?
You want to go with that?
Yeah. So, it's multifaceted because there's lots of elements to it. But if you just think about it fundamentally, we have equipment, we got service, and we got fuel. On the equipment, as we continue to grow sales, you're going to get volume leverage. There's a lot of things we're doing in our production processes, especially when you ramp electrolyzers as we have, as an example. We talked last year about a program we rolled out at the end of the year, which we called a new diffusion bonding process that's just a microcosm example of cost reduction opportunities. And that, by using a new process, we were able to cut the cost of that component almost in half. And it's as you scale and you get more of those opportunities with volume, you can do more of those kind of things. On the service front, we've rolled out a lot of programs which is driving that per unit cost reduction. With less touches, we've actually been able to reduce the labor techs this quarter and increase the unit per labor tech rate. And we've rolled out more programs and expect more that will continue to drive increased reliability on that. And on the fuel, you've seen over the last, year and a half, a continued progression in the margin. Every quarter continues to get better, and that's a combination of leveraging on our plants, taking advantage of the new supply agreement with the third-party provider, driving enhanced delivery, reducing delivery costs, and optimizing that network, and driving network efficiency. So we've still got a long way to go there, but it's going the right direction. We expect those trends to continue. So those are some of the themes that we've been able to take advantage of, and certainly consistent with what we're focused on to keep driving in the course of this year.
And on services for GenDrives, for material handling, I'm just going to add that the stack life of the product, we've been able to double it, and in some type of models even triple. That helps with the cost of parts for services, which is really important, but also because we're doing less changes in the field and less touches, as Paul was saying, we have also been able to reduce the labor in each one of the sites by one tech in some cases, or even two in some cases, which has had an incredible impact on the cost of labor for services.
Great. That's very helpful. Thank you very much.
Thank you.
Thank you. Next question is coming from Eric Stein from Craig-Hallum Capital Group. Your line is now live.
Hi, Jose Luis. Hi, Paul.
Hi, Eric.
Hey, Eric.
Hey, so maybe just on material handling, as we think about 2026 and 2027, just curious thoughts on how we should view the makeup new versus existing customers? And then also, in your prepared remarks, you talked about, with Walmart and Amazon that you've got some new sites, but also some refreshes. And so just curious kind of where you see things in terms of that refresh of sites that maybe you did 5-10 years ago.
So thank you for the question, Eric. On material handling for refreshes, we're going to see in the next few years, specifically for Amazon, a refresh of the complete fleet. Our first site with Amazon was in 2016, and we are in 2026. And they basically are using the Gen drives for about 10 years. So our first site, as I said, was in October of 2016. We're going to begin to see big refreshes at the end of this year, because the following year we did about 12 sites. So we're going to see a refresh of 12 sites between the end of 2026 and 2027. And then you will see a cadence of around 10 to 12 sites for the next 5 or 6 years or so. So we're going to get refreshes of around 20,000 units during that time frame. Walmart is similar. With Walmart, we have done refreshes in years 5 and 6, and we are right now discussing a substantial refresh of the install base in 2026 and 2027. So that is going to create a increase on demand for Gen drives. And as Paul was saying before, equipment margins are usually healthy, so we will see the impact of that in the next few years. In terms of new and even growth with other existing customers, what we're seeing is, for example, on the automotive side, we are doing refreshes and new sites with BMW, a couple of new sites in Europe with BMW. We are also seeing some growth with Stellantis and other European automakers. And we are signing either second sites or new sites with other customers. Like, for example, this quarter we signed a brand new pretty large site with Southwire with a value of $11 million. So we're seeing activity everywhere. We still see, obviously our two main customers, Walmart and Amazon, and two of the largest companies in the world. So we're going to see, a lot of impact on their demand in the next couple of years. But that's just healthy. And then we have the diversification of all of our other products. So we see the material handling market moving forward and growing in this year, in the following years.
Okay, I appreciate it. I'll leave it there. Thanks.
Thank you.
Thank you. As a reminder, if you'd like to be placed into question queue, please press star 1 on your telephone keypad. Our next question is coming from Sharif Al-Maghrabi from BTIG. Your line is now live.
Hey, good afternoon. Thank you. Paul, you touched on this, but Q1 saw another big improvement in fuel margins. And the new gas supply contract is obviously helping with that. But have all of your legacy contracts with the IGCs rolled off at this point? And I guess really I'm trying to understand if there's room to increase utilization at your captive plants, Louisiana, Georgia, Tennessee.
Yeah. So the short answer to your question is on the sourcing. The portfolio runs at different cycles in some of those contracts, and so they all terminate at different time periods. Today, consciously, it's roughly 50-50 sourcing third party versus internally leveraging our plants. And there's strategic reason why to keep that relationship in good standing and leverage those, because our plants, are, as an example, are in the southeast, and so it can be expensive to truck hydrogen all the way over to California or up to the northeast. Fortunately, with the agreement that we signed, it put us in a good footing with a substantial reduction in the cost per molecule, as well as a means by which to work with them to continue driving improved efficiencies and network optimization. But the drivers for us as we go forward are leveraging our plants, and as we continue to grow sales and more sites, We certainly will do, and third-party sales. You've seen some
In the first
smaller
quarter,
announcements recently where we're starting to sell into the merchant market as an example, and taking opportunistic opportunities there where we can to do that. So leveraging those plants will continue to grow and scale and leverage that overhead. The second is really optimizing the delivery network, really getting into how you deliver and when you deliver and how you manage that. There's tons of opportunities there. And then the efficiency of the network. We made huge strides on improving efficiencies of our storage systems and our dispensing capabilities, but there's still opportunities there as well. So those are some of the drivers as to what you've seen, as to why the margin continues to get better quarter after quarter. And it's certainly the same themes that we've got a daily focus on across all those opportunities that will continue to drive that over the course of this year.
Got it. That's helpful. Paul, I have one more for you. I missed how much you're expecting from the monetization of the Louisiana tax credits, and if you could share how that compares with Georgia, that'd be helpful.
Yeah, so absolute value, it's actually a little bit more. On a gross basis, it's like $39.4 million, I think the number was. And it's just to clarify, it's for our joint venture that we have in Louisiana. So that's proceeds that joint venture will get for selling that. And we obviously, I think you probably know, we consolidate that entity, so those results will show up in our consolidated results. And we'll work with the JV partner whether we leave that $39 million in the JV to fund operations, or whether they take their portion and we take our portion. Obviously, if it goes that route, we've got that. It's incremental 20 for Plug to fund operations, which is obviously very helpful. But we actually got better terms on that than we did in Georgia, just because of the passage of time and the learnings that we got out of the Georgia sale. So on a net basis, in terms of the gross tax credit, we got a better rate.
Great. Thanks again.
Thank you.
Thank you. Our next question today is coming from Dushyant Ailani from Jefferies. Your line is now live.
Yes, thanks for taking my question. Just one quick one. I guess if you're talking about the revenue progression for the year, I think it implies that maybe 2Q might be slightly down quarter over quarter. Is that correct? And then maybe what's kind of driving that? Was there any demand kind of pulling into 1Q? And then also, if 2Q is going to be down quarter over quarter, then how do we think about just the margin progression there in terms of the volumetric leverage that you shared previously?
Yeah, so let me try. There's many parts to your question, but so if you look historically, we're somewhere between 1/3 to 40%. It ranges slightly, and it on the first half of any year. It varies a lot based on timing of customer programs, and sometimes most times Q1 is lower than Q2. But let me be clear. We expect Q2 to grow sequentially. I think we're giving you guys a directional guidance and using that 40% in relation to our 13 to 15% growth rate for this year. It may only be slight growth off of Q1, but it's definitely going to be slightly better. And then you have the second half, and the timing of that. We'll see as we continue to progress through the year how that's going to play. On the margin progression, again, just to be direct, we absolutely expect the margin rate to continue to improve sequentially quarter over quarter. We're all the costs down and things that we're doing, are going to continue to, should continue to drive incremental benefit. So we expect that margin rate to improve, in Q2 and then continue to ramp from there. Volume makes a big difference, and so the fact that the second half is, using my math of roughly 60% of the sales, it means there's even more equipment sales in that second half, so that means it's even more accretive. But I think what you're going to see is quarter over quarter, you're going to see growth in the sales number, and you're definitely going to see growth in I should say, we expect it to see growth in the margin rate.
Yeah. And I just want to reinstate what you just said, Paul. Q2 will be progression in terms of top line compared to Q1.
Got it. Thank you.
Thank you. Next question is coming from Chris Dendrinos from RBC Capital Markets. Your line is now live.
Yeah, thank you. I just wanted to circle back to Europe a little bit here, and I'm curious, looking at some of these refineries and the customer base there, are they kind of ultimately settling out on a long-term partner here and picking tech? I guess just looking back over some of these, the competitors out there, it looks like there have been testing of different technologies, et cetera. And so I'm just kind of curious what you're seeing on that front. Thanks.
We're seeing specifically with the companies that we're doing business in the refinery side, the largest ones that I mentioned during the call, we're seeing that they are looking at expansions in the sites that we have done and in other sites. We're seeing that the progression that we're making on the commissioning of the product is very satisfactory, and we are looking with them about working together for some of those expansion projects. Given the directives that the EU is pushing through every country through a process that they call transposition, which is as simple as a European law converted into a law in each one of the countries that are members of the EU, they have a mandate to convert a certain percentage of the hydrogen they use into green hydrogen, and this is what's driving these projects. And they are committing to do it, and we're working with them to satisfy those needs.
Got it. Thank you. And I guess maybe as a follow-up here, just on the opportunity with Allied Green in Uzbekistan and maybe in Australia as well. Can you speak to the potential timing of this and how you see that kind of trend, playing out over the course of the year? Thank you.
Yes. I mean, I can speak to the timing that I've discussed with Alfred from Allied Green in the last discussions I had with him as last week, right? Now, these timings, as I said before, because of the complexity of this type of projects, usually, change. But right now, the idea is or the objective would be to do a BDP on the Uzbekistan project in the second, and BDP is the basic engineering design package, in the second half of 2026. And then his target is to get to FID in the following months, with a potential loan notice to proceed to plug earlier than that. So it is a project that could, and I insist, I don't want to create an expectation that I cannot live up to, because there are so many things that are outside of my control in these projects, right? But in the last conversations, is a project that should be moving forward in the next 12 months, with a BDP happening before, and with a loan notice to proceed also in that time frame.
Got it. Thank you very much.
Thank you.
Thank you. Next question is coming from Craig Irwin from Roth Capital Partners. Your line is now live.
Hey guys, it's Andrew on for Greg. Thanks for taking my questions. I've been hopping across a couple calls, so I apologize. This has been asked already. Just let me know. I can ask something else. But you guys called out expansion with Amazon and Walmart with the material handling. But can you guys kind of talk to any new logo pipeline expansion, and then just overall kind of the mix between site expansion with the existing customers versus new customer wins? That would be great.
Our team was in Modex. Modex is the largest event for manufacturing and supply chain in April, and our team met with a large amount of companies, new logos that were interested in the material handling business case, given the points that I made before, mainly associated with productivity, with the ITC, and also the advantages associated with reducing the grid demand. At this moment, the majority of the growth that I see in 2026 are related to existing customers. As I said before, mainly Amazon, mainly Walmart, and also associated with automotive. We have new projects with BMW, we have projects with Stellantis, and with other European automakers. We closed another second site with Southwire, as I mentioned before. That's not a new name, but it's a second site that we closed with them. And we have a fairly healthy pipeline of new names and new customers. At this moment, I'm not in position to tell you right now that we're going to get orders for certain specific names, but I can tell you that the team is working in a few new potential accounts that could be added between now and the end of the year for projects in 2027.
Great. Well, I really appreciate the color there. And second for me, kind of in the same vein, I noticed the GenDrive cost per unit was down 30% year over year. Can you just kind of talk about the potential to leverage cost reduction throughout your installed base?
Yeah, I think our anticipation is that unit cost will continue to come down, and it comes from two key drivers. One is, well, I'd say three. First is the parts cost continues to go down as we get the units to continue to run longer, so you just need less parts to keep them up and running. Second is, as that happens, you need less touches of the units throughout the year. So when you need less touches, then you can manage the fleet with less labor techs. And so we're able, as Jose said earlier in the call, we're able to reduce, in some cases, one tech per site, in some cases even two techs per site. And so, we expect that leverage continues as we get and continue to grow and scale. And then the third is you sell more units and you grow your sales base, you can leverage the overhead for that service business. So that continues to scale and grow and ramp as well. So, we expect that rate per unit will continue to go down in the course of the year. And, we expect that to continue to drive in the right direction.
Understood. Appreciate the detail and congrats on the continued progress.
Thank you so much.
Thank you. We've reached the end of our question and answer session. I'd like to turn the floor back over to Jose Luis for any further closing comments.
Well, thank you everyone for the questions and for your engagement and your support. The first quarter results that we just announced provide a solid foundation for the balance of the year. Our priorities for 2026 are the same. They remain unchanged. Drive continued sales growth, execute with discipline, continue improving our cost structure, reduce cash usage, and deliver positive EBITDAs in the fourth quarter. The underlying business fundamentals continue to improve. Demand drivers across our core markets are strengthening, and now it's just about consistent delivery. We appreciate your continued support and look forward to updating you on our progress in the next quarter. Thank you, everyone. Have a nice evening.
Thank you. That does conclude today's teleconference and webcast. You may disconnect your line at this time and have a wonderful day.
There we go. Plug Power earnings. What an evening that was. So up and down like a yo-yo, as I said perfectly, I would be taking my profit there. I would have been out 15% swing. Absolutely. I do not see anything that tells me that the stock is going to rally from here. Can't be a short squeeze. There's not enough volume and there's not enough short interest for that either. People sort of banking on that sort of strategy. I don't think it's right yet. Yes, we are improving, but this could drop down to $2 again. It could go up and it could go up to $4. I just think it's too volatile. It's not a place for me. That's very, very, very high risk gambling. And there was nothing in that call which would suggest buy this and I can make money. So it's not for me, I'm afraid. I can't. There's nothing in that call which said to me I can buy this. On the other hand, Our portfolio is up again today, and we're beating the market again, which is great. Tomorrow morning, of course, though, it could all go the other way. I'm expecting my portfolio to go up again tomorrow, though, because the inflation is going to come in hot and people are going to buy defensive because the market is down. It's going to be down tomorrow. That's my anticipation. So that's it from me. I'm going to go over to Discord in a few moments and do a Discord event. I'm also going to go into get ready for the inflation report in the morning. I'm expecting that to be quite a volatile day. So thank you very much for being here. I hope you've all enjoyed it. I will look forward to seeing you on Discord in about 15 minutes to prepare for the inflation report tomorrow. And I will see you all in the morning as well for the inflation report itself. Going to be a very busy day. We've got XRP Day coming up. We've got Ethereum Day, Bitcoin Day, and of course the Clarity Act vote on Thursday as well. Much more coming your way. So thank you very much for tuning in. I look forward to seeing you on Discord in a few minutes' time. And that's it from me. Until next time, as always, take care of yourselves and each other. Have a peaceful evening. Bye-bye.